What if the financial system you live in wasn't built to stabilize your economy, or protect your savings, or create fair opportunities? What if it was engineered intentionally or accidentally into a self-expanding trap? A machine that grows during prosperity, expands during crises, and accelerates during collapse. A system that never shrinks, never resets, and never stops, no matter how many people it crushes in the process. Here's the mystery. Why does global debt grow every year, even during economic booms? To understand the trap, we have to begin not with modern banking, but with the moment money stopped being a physical asset and became a promise. For centuries, money was tied to something real: gold, silver, grain, land. It had weight. It had scarcity. It had limits. Those limits were inconvenient for kings, emperors, and governments. Because real money meant real restraint. You couldn't wage unlimited wars. You couldn't build massive empires on debt. You couldn't spend more than your treasury held. But as power grew, so did ambition. And in royal courts, parliament halls, and early central banks, a new idea began to form. What if money didn't need to be scarce? What if it could be created on demand? What if the issuer of money could control societies, economies, and political outcomes? That idea would evolve into the modern monetary system. A system with three hidden components. Debt grows faster than the economy. Money supply must rise to prevent collapse. Every solution increases the size of the next crisis. This is the trap. A design that expands at every stage of history. Money wasn't just connected to gold anymore. It was tied to promises, bonds, and liabilities. Debt had become currency. This was the moment the trap was born. Because once money equals debt, the system can never shrink. Payments require more money. More money creates more debt, and the cycle feeds itself. Even then, few understood the long-term consequences. But history was about to reveal them again and again. The next phase came with industrialization and the rise of large nation-states. Each debt pile required more money, and each new batch of money created more debt. After the wars, nations tried half-heartedly to return to discipline. But the trap had already formed. Economies couldn't shrink without collapsing. Governments couldn't cut spending without riots. Banks couldn't contract credit without triggering depressions. The system was now self-expanding. It wasn't a choice anymore. It was a requirement. On August 15, 1971, the final restraint was cut. President Richard Nixon ended the dollar's convertibility to gold. Money no longer had an anchor. It became pure fiat currency, backed only by government decree. And when money is unlimited, the trap becomes unstoppable. Because fiat money is created through debt, governments issue bonds, banks create credit, central banks add liquidity, and every dollar created must be paid back with interest. But where does the money to pay that interest come from? More debt, more money, more expansion. This is not a cycle. It is a mathematical certainty. A system that must grow forever just to survive. Once gold was removed, the trap locked into place fully and permanently. After 1971, something subtle but devastating began to happen. Prices went up, wages lagged behind. Savings eroded, debt skyrocketed. Households needed loans to buy cars, homes, education, things that once required only savings. Governments needed constant borrowing just to maintain services. Corporations relied on credit to grow, merge, and dominate. Everyone, individuals, companies, nations, became dependent on debt. And in a debt-based system, whoever controls credit controls society. The winners became big banks, central banks, debt issuers, financial institutions. The losers became workers, savers, small businesses. The middle-class debt was no longer a tool. It became the environment we live in. The trap was now global. Whenever the system begins to crack, leaders promise reforms. But the solutions always follow the same formula. Print more, borrow more, spend more. 1980s debt crisis gives more loans. Dot-com crash gives lower interest rates. 2008 collapse gives quantitative easing. Pandemic crisis gives record money creation at every stage. The trap expands. Each crisis becomes the excuse for a bigger intervention. Each intervention becomes the cause of a bigger crisis. The machine feeds itself. It grows regardless of who suffers beneath it, because shrinking the system would cause total collapse. There is no political will to fix it. There is no financial incentive to fix it. And there is no mathematical path to fix it. The trap must grow or die. Today, the expansion is visible everywhere. Global debt has surpassed $300 trillion. Many governments spend more on interest payments than education. Central banks have injected over $30 trillion since 2008. Real wages in major nations haven't grown in decades. Housing prices have grown faster than income in 90% of developed countries. Inflation remains baked into the system, even after tightening. These are not accidents. They're consequences of a system that cannot stop expanding. Debt must rise. Money must grow. Inflation must persist. Otherwise, the system collapses under its own weight. The trap continues tightening, generation after generation. Here's the truth most people never realize. The monetary trap isn't the result of greed, corruption, or incompetence, though those things make it worse. The trap is structural. It was built into the foundations of fractional banking, fiat currency, and political finance. A system based on debt must expand. Every solution, stimulus, lower rates, bailouts only enlarges the trap and shifts the burden to future generations. A warning: the next crisis, whether debt-driven, geopolitical, or technological, may force the system to expand at a scale we've never seen. And when a system designed to expand hits its limits, the consequences rewrite the world. If you want more deep, research-driven breakdowns of global finance, hidden monetary structures, and the economic forces shaping your future, like the video, subscribe to the channel, turn on notifications. Because in the next episode, we explore the moment the trap becomes too big to contain, and what happens when the global debt machine finally reaches its breaking point. Stay aware, stay curious, and question everything the system tells you.